afternoon. How are you all doing? You know, I'm sandwiched between extraordinarily smart people who came before me and extraordinarily smart people who are coming after me. And so I'm the low light of the afternoon, but I'm very comfortable with that. So Mohan is not here. Mohan, thank you. Pranav, Siddharth, Nritya. It's always great to be in Bangalore. Bangalore is my hometown. I grew up here. And it's ironic that I'm standing here to give you a sense of what American CIOs or American investors think about investing in India. So I have a formal deck. I will go through the presentation, and we will probably have around 10, 12 minutes for Q&A if we have time. So context is very important, right? And, you know, I met Keki in 1998 when I was managing Lockheed's pension fund. And at that time, HDFC was, 83% of HDFC was owned by American institutional investors. It's pretty incredible that a company like HDFC, the foreign ownership was as high as it was in the 90s. And Keki is not only a great Indian CEO, but I think he's one of the finest CEOs I have met, and I have met a lot of CEOs in my life. And so it's always great to see people like Keki and Deepak Parekh, who was Deepak was Keki's boss at that time at HDFC. So why is India interesting to a global investor? Right. It's actually not as complex as it sounds. You know, the video that you just saw, it was obviously an Italian, right? And, you know, Italy is a great country, but none of us actually go to Italy to find investments, do we? We don't go to France. We don't go to Spain, right? So what is left in today's world after the US, where most of our money is invested? Again, the context is important. I'm actually talking to you purely as an American CIO, investing as a strategist who is investing globally and looking at the world and the opportunity set. So everything I said today is going to be in that context. So for those who are extremely bullish on India or otherwise, it's a very balanced view. So take it for what it is worth, that the issues that we deal with looking at investing in India are the ones that I'm going to discuss today. Right, so US is roughly 30% of world GDP, but the market capitalization of the US is 70% of global market capitalization. That cannot continue, right? Where can that go? Can US be 90% of global market capitalization? No. So as investors, US investors, we have to look outside the US. So where do we look? So we are looking in Europe, we were looking in China, but for many of you here, US investors, you know the issues we are dealing with investing in China. So what is left? So India is the third obvious choice. So we invest in US, we invest in Europe, and we are looking to invest in India. Now, India is a great story. India has been a great story for a long time. The question really is, how much can we invest in India? Unless we want to deploy 10%, 15% of our capital, it is just noise. So the question is whether we can invest significant amount of our capital in a market like India, right? So why is India why is it interesting? I won't go through all these slides in detail because these are obvious, right? We know where India stands in the world context. You know, India is at 3.6 trillion on the left, and our GDP growth is one of the highest. These are all very well-known data points. We know the demographics. It's incredible that, you know, we have the youth bulge. It'll probably be there for another 5, 10 years. It won't be there forever. But at this point, if you have a 5 to 10 year horizon, India is a great story. Right. Now, number of households. Now, you get all kinds of data suggesting how much of India is middle class, how much of it is rich, how much of it is soon to be rich. But let's assume that out of the 1.4 billion people, roughly 300 to 400 million is a consumer class or a middle class that is able to spend almost all their income on consumption. And I'll come back to this. Right? So what drives India's GDP? Services are 54% of India's GDP. Right? Industry is 31%, agricultural is 15%. Right? Now, if it was as simple as this chart suggests, it would be fine, but I think most of India's employment is in the agriculture sector, contributing only 15% of GDP. So it's not the right way to build an economy, but that's what India has got. So what is it that interests us, right? Other than the data points that I showed you, right? What is India to us, right? India, when you look at the US, you can build a very diversified portfolio in the US across asset classes, and the question is whether we can do it in China, whether we can do it in India, or we can do it in Europe, right? So what does India mean to us? Is it India beta? Is it the Indian stock market? Is it domestic consumption? Is it alternative fintech, banking solutions, services, China plus one? What is it? Right? Or is it, for the right reasons, I don't have Indian real estate, for example. Most US investors will not touch real estate anywhere outside the US, let alone India. Right? So what is it? Right? So this is the construct that we all work with in the US. Right? This is not alien to any of you. Right? We have asset classes that are well known in the public markets or in real assets towards the left and bottom, and then we have the riskier asset classes on the right. And whether it's public equity, private equity, and venture capital. Right? We know this structure. Right? The question is, does this structure work in India? Right? And so my discussion will be basically how we are looking at India and how we are studying the Indian construct, and whether it is rational for a US investor to invest in. So this is how we look at it in the US. This is all about how we look at understanding market drivers and asset classes in the US. Right? So public equities, what we expect, private equity, what we expect, venture capital, what we expect, what are the drivers, right? And what is the risk associated with each of these. And so it's pretty straightforward. Right? So the question is, what next? Just to okay. So this is the experience of US investors when we invest in all these asset classes, about how dispersed the returns are. So for this discussion today, on the right side, when you see the color bars, all the private assets, whether it's venture capital, private equity, real estate, the dispersion of returns are actually quite big. That is, the difference between the top quartile manager and the bottom quartile managers are huge. So it's extremely important that if you can't be in the top quartile of these asset classes, just don't invest in those asset classes. The same phenomena, I bet you, in 10 years, you will see happen in India too. We don't have the data yet, but I can guarantee that the dispersion of returns within venture capital in India, within private equity in India also will be great. So what happened to India over the last 10, 20 years compared to the US, right? Both in public markets and private markets, right? So over the 10 years, as you see on the left side, US did 13%, India did 9%. Right? In the private markets, over the 10 years, 15 and 12. Right? So US clearly did better than India. So the question is, as a strategist, as an allocator, why do we want to invest in India? Why should we invest in India? The only reason an American investor should invest outside in US is if we can do better. And that holds for China, that holds for Europe. It's not about India. For any US investor whose assets are in dollars, our liabilities are in dollars, and if you want to invest anywhere outside the US, we have to believe that we can do better. Now, all of us think that when we make these decisions to invest in China or India, we are betting that we can invest in the top quartile managers in each of the asset classes. As you just saw in the previous slide, if we cannot invest in top quartile, top decile managers in venture or in PE in India, none of us should invest. Right? So our challenge is these are averages. I fully expect a top decile active manager. These are indices. This is not an active manager performance, whether it's in the US or in India. So we fully believe that the active managers, whether in venture or in public, should be able to beat these. Otherwise, there is really no reason to invest outside the US. If any of you have questions, you don't have to wait for the end. You can raise your hands and I will stop. Okay, so now one of the issues that we face is that if you invest 100 million in India, and let's say that on a net basis, the manager does 4x and returns 400 million. What happens to that 400 million, right? So the currency depreciation and the tax leakages will cost us 75 million, out of the 475 million. So by the time we get the money, it's around 300 million. Right? So this is a very unique problem. So you shouldn't assume that we experience this everywhere in the world. We don't. Right? So the work that Siddharth, Pranav, and Mohan are doing to educate our regulators that this is absolutely harmful for any FDI to come in, it's a real issue. Right? This has to be addressed because this is a constraint that you're imposing on the Indian marketplace that actually will hurt if you are trying to get FDI into the country. Okay, so what did we experience? So I will go through each markets, public and private equity and venture, and we will address some structural issues. And then I think I'll take questions because, okay, so this is how the public markets in the US look on the left side in terms of creating companies at scale, right? So there are 102 companies with at least 100 billion market cap in the US. Right? And there are 4 such companies in India. Right? So India's future in the next years will be determined by how many 100 billion plus companies we will be able to create in the next 10, 20, 30 years. Right? And so on valuations, right? So the scale is very different. The total market cap of Indian companies is around 5 trillion. The total market cap of American companies is around 50 to 60 trillion. Right? So India trades very rich. One of the issues that we have is that India is a very rich market. Indian companies tend to trade very rich, and that has been true for a long time. This chart to show you the same on an EPS scale. And the other issue we have is that the float in India is much smaller than what you see in comparable markets in Europe or in the US. As you know, in the US, 95% of every company's float is tradable. Okay. Private equity growth. Now, there's a lot of data here. I do not like usually charts with a lot of numbers, but the top line is the most important and the useful line. So the US PE market leverage is easily available, and most private equity in the US is levered. Right? That leverage is what allows private equity to generate returns the way they do in the US. Right? And as you see at the bottom, when the cost of debt is less than cost of equity, that leverage allows you to generate higher return on equity. Now, private equity is not a very successful model in India compared to the US, mainly for the absence of leverage in the Indian model. Right? So that is the issue of cost of capital, but that is much more complicated. Investor experience. Okay, this is my favorite chart in the entire presentation. It's a very simple chart. There's nothing there. Right? It is just a list of 7 companies. Everybody knows these companies. But if you just try to dig deep into what allowed these companies to reach this scale, each one is a phenomenal story. Right? Now, Apple's market cap is almost India's GDP. Just one company. Right? But look at 4 of these companies have replaced the founders are gone. They have new professional management. It's Microsoft, Apple, Amazon, Google. Right? So this can happen only in the US. I came into this business around 35 years ago. Many of these companies did not exist. Right? Except Microsoft and Apple, none of the other companies existed when I got into the business. Right? So the founders can easily walk away. Right? Founders walked away from many of these companies. It's very uniquely American. Right? So the question is, what allowed this phenomena? Right? And half of these companies were born in Silicon Valley. Half of these companies were venture funded. So I think I shared this quote with my colleague Kenzie. I saw this quote the other day that said that I asked God for flowers and God gave me rain. So if we have to ask God for great companies in India, God has to give us a great venture ecosystem. Right? Venture ecosystem is what allows this to happen. Right? Without venture ecosystem, US would not be experiencing what we are seeing today. Right? So it is fundamental to creating equity in the US today. Right? So this is what I think India needs if India needs to generate or create companies with 100 billion market value in big numbers. So it's not that India is not doing what it should do. Right? These are all great stories. Right? So we need many more such stories for India to get interesting for a global investor. Now, all these companies, I think you saw Pranav's presentation, excellent presentation, talks about innovation. Now, innovation is not just science. Innovation can be simple. These are all quite simple business models. Electric vehicles is not a phenomenal, innovative idea. Bangalore was producing electric vehicles 50 years ago. Reva was a company that was here long before Tesla came. Right? So, Amazon is not an innovative idea. Right? I was working at Howard Hughes in '96, and when Bezos came to ask for 25 million, my CIO threw him out because none of us understood what the hell he was talking about. He wanted to sell books online. Right? That was his pitch. Right? And he was obviously a visionary, but none of us were. Right? We are mere mortals, looking at numbers, looking at charts, but we couldn't figure it out. Right? Same thing with Uber. I met Travis Kalanick and Kalasnik, and I didn't understand. I asked him, how will a young woman ever get into a car with a stranger that she has never met? Right? But we know what happened to Uber. Right? So innovation. Right? So the question is whether India can build companies with innovation as its engine. Right? Now, what do we need? All these things. There is nothing that you're not familiar with. And India has all of them, right? Except we are trying to figure out whether they have innovation. Now, does India have enough capital? Right? So look at this chart. India has more than its share of capital. Right? If you think about a production function with capital and labor, India has labor and India has capital. At least based on 23 and 24 data, it is doing better than China. Right? India's global contribution to global GDP is 3.6%, but it's getting 4.2% of venture capital. Right? China's GDP share is much higher, and it's getting a lower share of venture capital funding. Right? So capital clearly is not the issue. Now, this is the issue, right? Whether India can and will spend on R&D. Right? The reason why you saw the previous chart with 7 companies, right, is the amount of R&D spend that US does on an annual basis. The question is whether India can actually invest in innovation. To me, that it is quite illogical that we expect venture capital in India to deliver high returns when there is no commensurate R&D spend. If there was no R&D spend in the US, you would not have the venture capital industry we have. So if India is trying to duplicate or replicate the US venture model with both its hands tied behind, then we are quite foolish to expect the power law to work in India. I mean, yes, power law to work in India. Power law will not work in India. It cannot work in India. You will not have a Google, NVIDIA, Amazon, Tesla, Netflix in India unless you have R&D spend. I won't spend, the photos speak for themselves. We have great digital infrastructure. Now physical infrastructure is lacking. We have the educational institutions. Everybody knows these are world famous. Plenty of them. Right? The question is whether we have community participation. Right? So when you want to compare this with, it's easy to compare with the US because we have the data. In the US, roughly 33 to 40% of them file file taxes. More people file returns, but they get refunds. So the people who actually contribute in terms of taxes is around 40%. It's a big number. Now, so what do we do with the construct that we are presented when we visit India to find investments? Right? So these are the reasons why I think that Indian public markets are not comparable to US markets. Indian VC is not comparable to US VC. Indian PE is not comparable to US PE. It doesn't mean that India is not a good destination. India is a great destination. But India has to come up with a very unique model with a unique solution. I think it will be done because sooner than later, you'll find that this construct, if it doesn't deliver the returns, because if you promise power law returns in India, if it won't happen, it's not that India cannot make money. It is just that we have a wrong model. So, as I said that, India is an attractive destination. We have to change the way we construct and market our asset classes. We have to find unique solutions to address the Indian investment opportunity set. We have great ingredients, but we don't know whether we have the right recipe. And India should be much more comfortable promising 3 to 5 times outcomes and then come up with a structure that allows you to deliver those returns over the long term. Because India is not going to go away. India is a great consumer story, and it is going to build great companies. It will take time, but I think it's important how you build the portfolio. So with that, those are my formal remarks, and if you have any Q&A, I'll be happy to take them.
So you mentioned about the R&D spend which is required in India, but also if you can throw some light on from where does this R&D spend come? Because we have seen corporate profits in India grow in the last 10 years at a good scale, and many companies discovering overseas markets, many overseas companies partnering in India. So is it that we are wanting to have this quite fast in India because after say a decade or two, India will be well prepared to spend on R&D as well. So any thoughts on that?
Yes. So, let's step back. So I was telling Mohan earlier at lunch that there are two models that we are very familiar with. The US model, where private enterprise is responsible for all the growth. And in China, where it is central command, where the government invests in R&D, and then a lot of, the China story. But US and China are very distinct. So India is neither China nor the US. In India, the state is very powerful, right? And so if the state is very powerful, think Singapore, right? You have great inspired leadership. Lee Kuan Yew was a great leader. Deng Xiaoping in China was a great visionary leader. So you need great leadership. And then you need innovation. Whether innovation comes from the government or private enterprise, it doesn't matter, right? And then if you have innovation, if you have great inspiring leadership, the last leg of the stool is infrastructure. China and Singapore built great infrastructure with inspiring leadership. And then if you have infrastructure, then investment will come, right? And so I think in India, you absolutely need great leadership that understands how you build those 7 companies, right? Without building those 7 companies, I can give you the same 7 companies in China, right? And so you need all these 3. You need inspiring leadership. So the question is, does India have inspiring leadership? And I already told you that state is very powerful in India. This is the only country where, on the day of the budget, it is telecast live and the finance minister is speaking. I find it ridiculous, frankly speaking, right? But that's what you got. Right? So I think that you need inspiring leadership and you need somebody to come and invest, and it has to be either private enterprise or the government. Right? And these models are already available. The US is, I work at Emory, and we probably get $1 billion from NIH every year. Every year, right? And so, a small enterprise like Emory, we created this drug called molnupiravir that is used for COVID treatment, and we made $600-700 million. So there is a huge return on R&D, but then that has to come from, as I said, either private enterprise or from the political dispensation. Right? So for that, you need a Deng Xiaoping or a Lee Kuan Yew. There's no other way around it. Please.
I think you said that to be meaningful, and I'm from the U.S. as well, to be meaningful in terms of a country allocation, I think you said 10%. So how do you think about your allocation to India and then the different asset classes, whether it be private equity or venture and other things that you could do in India to get to 10% of an endowment, which seems like a really big number?
Yeah, so look, we are investment strategists, right? So if you look at the global markets or look at MSCI, India's allocation to MSCI is less than 5% in the public markets. Now, if you are a strategist, if you want to invest in any market, China, India, there has to be some starting point. Right? And our starting point as asset allocators, CIOs, is, okay, look at MSCI and how much contribution is India making to MSCI. Let's say it's 4%. So then you start actually putting resources, and I have my extraordinary colleagues, both Mac and Kenzie here sitting there. So we do a lot of work understanding where do we invest, right? And so if it is not 5%, it is not meaningful to the endowment. Right? So we start with that premise, okay, are we willing to put 5 cents on the dollar? Once we decide we want to put 5 cents on the dollar, then we can look at the underlying opportunity set, whether it's venture, private equity, or whatever. Right? So in the Indian market, actually, it is not that complex. There is very little private equity in India. Right? I can name the 5 to 10 firms in private equity in India. Right? Because why? Without leverage, you cannot really compete with private equity in the US. Venture ecosystem can compete because it's purely innovation. Right? Now, we need to parse through the definition of what innovation means, but I just gave you the examples that in the US, half the market cap of the S&P probably gave birth to those companies in Silicon Valley, one way or the other. Right? Amazon is in Seattle, Microsoft is in Seattle, but let's say the West Coast. Right? So in India, it's public markets, and you have to pick. You pick public markets, you pick venture ecosystem, and then you allocate accordingly. Now, it sounds simpler because to get to 10% is extraordinarily difficult. Right? I manage a small pool, 12 billion, so to put 1.2 billion in India is not easy. Because India is not the only market. We have a pretty, our opportunity set is global.
Srini, thank you for your thoughts. I think the one thought that's troubling me, I'd love to get your thoughts on Trump's policies and how do you see this evolve? I mean, the last 2 months has been a roller coaster ride for all of us across the globe on the public market side. I'm sure you've got your team working around the clock trying to figure out the impact of all the trade war and tariffs. Any views, anything you would like to share on that? That'd be great.
Who's Trump? No, on a serious note, look, it's only been 50 days, right? And all I can tell you that is no country can go through this for the next 4 years. Right? I think things will settle down. Now, being apolitical and taking politics out of this, many of the issues he's raising are actually quite genuine issues. I think that Europe took US for granted for a very long time. And the institutional inertia is real. And that's real in India, it's real in China, it's real in the US, it's real everywhere. So I think the system needed a shock, and Trump is the shock. And some of the issues that he is making front and center, like tariffs, are not irrational. Now, I'm a student of economics. I studied economics. We were taught that tariffs are bad. And in theory, it's true. But I think there is some method to madness that, to his argument. Now, the first thing you have to understand is he's a very transactional guy. And he likes to, scream fire and then back off. And he has done that repeatedly. And I think that you are already seeing markets in Mexico or in Canada, elsewhere, change their, behavior. And more importantly, even India is going to change its behavior. India cannot levy a 100% tariff on American cars and then want only 3% tariffs on the other side. And so I think there will be a more equal playing field. I think American taxpayers have paid for this for a very long time. And now on foreign policy, for example, Ukraine and Russia, many of Americans probably don't agree, but many do, that we should not be underwriting Ukraine's war against Russia. So I think in the next 6 months, things will settle down. Now, will I be proven wrong? Possibly. But this is what American electorate chose, and this is what they got, and they have to live with it for 4 years. But he is acutely aware of the impact of policies on the stock market. And I can assure you that the people closest to him remind him of this every day. And so, am I cautiously optimistic? Yes. But are we prepared for the worst? Yes. We have to. But that is Trump for you. But again, I think despite what half the country may think, he is an American. He wants America to do well. He thinks that America was taken for a ride for the last 50 years, and he wants to correct it. We may not like the way he does it. We may not agree with everything he wants to do and the way he wants to do, but I think that there is some method to madness, and he'll be okay. Yes, sir.
Srini, you've seen entrepreneurs in the United States extremely successful. Now, you've been to India many times. You've seen entrepreneurs in India. What do you see as the difference between entrepreneurs in the US and young entrepreneurs in this country? And what would you advise young entrepreneurs in this country?
If I knew the answer to that question, Mohan, I would not be standing here, no? But this is what we do. And in fact, we study CEOs across the world. We want to see what makes a great CEO, what makes a very successful, stable, long-tenured CEO like Cook at Apple. Why Sergey Brin and Larry Page left after 10 years. Why did they give the ship away to, or Satya Nadella? Gates could have done it. Ballmer could have done it for longer. Why Satya is such a great CEO? Right? Satya is truly extraordinary CEO. What he has done to Microsoft is bigger than what Gates and Ballmer did together, right? In terms of growth in market cap of Microsoft over his tenure, right? And so, look, India has astonishingly smart people. Now, the risk-taking ability and understanding scale is not where it should be compared to what we see in the US. And the second thing we see is the Indian entrepreneurs who start companies get satisfied very easily at 50, 100, 200 million, and they are willing to walk away, right? And 2 days ago, I had a call with somebody who had an $8 billion exit. And the day after, he was in his office for 20 hours trying to build his second company, right? It's not money, right? 8 billion is a lot of currency, right? So he was willing to take an hour call with me the day after he was wired 8 billion. So that mindset is what makes American entrepreneur very unique, right? They're not doing it for money, right? I can tell you the top 3 Sequoia partners together, just the 3 partners have 100 billion in 3 companies, all private companies, Stripe and 2 others. But they still work very hard. Their share is 100 billion. Yes, right? So it's not just the money, right? It is whether people can think big. And when I say big, I'm talking Jason Wong at NVIDIA, right? Or what Bezos did at Amazon. So that is a very unique characteristic that defines the US entrepreneurial system. I think when you see that here, you will know. Right? These are all great ideas. These are all great companies. Right? The question is whether you can build one company like that, that will kickstart that spirit. Because scale and risk is a very amorphous concept. If you walk in and if you have 100 billion and if you are told to build a portfolio, how do you know how much risk to take? Right? Investing in India is a risk, but how do you know how much risk to take in India? Like that gentleman asked, how do you know how much private equity, how much venture capital, whether public markets? Right? Because the duration of investments in each of these asset classes is very different. Right? I was talking to Catamaran CIO Deepak, right? So he was saying that the DPI can take time. It took time in the US, it will take time in India. Absolutely true, right? But think about it. You all sold us this structure of 5 plus 5 plus 2. 5 years investment period, 5 years harvesting, and 2 years extension. But let's say that year 8 goes by, DPI is 0. Fine, perfectly fine, no issue. Year 9 comes, right? What is the model telling you? That in the year 9 and 10, you will have 100% of your distributions. Let's say year 9 goes by 0, because the companies are doing great, you don't want to sell, perfectly rational. Year 10 comes, what happens if the DPI doesn't manifest? What if markets are not cooperative? Let's say public markets are going through one of their down cycles, right? So I think that the portfolio construction and managing it is an art. It's just not science, right? And so I think that understanding of risk in each asset class and the drivers of each of these asset classes is very critical when you're trying to build these kinds of portfolios.
How do you get them to think of the next big one? Like you give an example of $8 billion. Someone who sold a business for $8 billion, he's still not happy with what he has done. He wants to do the next. How do you make an Indian entrepreneur think of the next?
It will come. And, my team is very used to it. I'm a storyteller. I tell stories. The way I convey my message is through stories. So you'll see, and many of the American investors here probably are familiar with Chris Hahn, who started this group called the Children's Investment Fund in London. Right? Many of the US endowments are invested in TCI. And so he came out of Perry Capital in 2003. And in 2004, I was one of his first investors with Yale and a few others. He will go down in history as one of the 3 greatest investors of all time. Right? So what did he do? So one of his first ideas was to go and invest in stock exchanges. Deutsche Börse, London Stock Exchange, New York. Stock exchanges existed for hundreds of years, 100 years plus. But nobody thought that you can monetize a stock exchange because they're very profitable. So he created that opportunity, right? They existed, but he was able to convince that, okay, the stock exchanges should be monetized, convinced Deutsche Börse, London Stock Exchange, NASDAQ, and it became one of the most successful investments of his. Then he went to railroads. Railroads existed for hundreds of years, right? And now railroads became one of the hot investments when he was doing it, right? So there are assets everywhere. The question is whether you can leverage those assets. So here in India, you have to ask yourself, what are your strengths? Clearly demographics, right? Clearly consumer, right? The question is, how are you going to leverage that? It's not just creating a consumer company, right? In the US, for example, you are going to see this, the monetization of sports franchises. Sports have been there for a long time in the US. We have baseball teams, basketball teams. There are a club of owners, they own them. And the last team that was sold was bought for 800 million, sold for 6 billion. Washington Commanders, if you don't know them, they're a football team in Washington, DC. So a lot of money was created. So now the new model is, how are you going to monetize those sports franchises, because there's a lot of value there. Not for sports. It has nothing to do with sports. The next investment model is using that asset to leverage that asset to do completely different than what that actual business of sport is, right? So you are going to see that talent come up where they will use the existing like Uber. What is Uber? It's you had a car, it was not driving, you could drive and make some money. It's monetizing an existing asset that was sitting in the garage. Airbnb was exactly the same phenomena. So these are the new ways that you are creating $50, $100 billion companies using existing assets that are already in place. The sports franchises is just an example. So you are going to see, that is the next evolution of the Indian entrepreneur. They are not going to just start something from scratch. The real value is when you can use an existing asset, lever it up, and create a driver of value. And that is what you're going to see. And it will happen. It's just a matter of time. Any other questions? Well, Pranav, Mohan, Siddharth, Ritya, thank you.